into the real estate. Okay, here we go. So 5 seconds of silence here. Or actually, be quiet until I introduce you. Welcome. You're listening to The Best of Investing on Talk 910. You know our show. It's where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Rick Warner of Keller Williams Realty. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located about 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511, and today's trivia theme is old TV. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. We're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. With all that said, in one breath, today's guest is America's Business Coach, Coach Ron Tunick, who's going to talk a little bit about current news and social media, and then he'll also chime in when we talk about some real estate. Coach, welcome to the Best of Investing.
Edward, I always love being on your show. It's really an honor, and hello to everybody in Northern California. My daughter lives there up in San Francisco, and I love your neck of the woods, so thanks for having me back.
Absolutely, always a pleasure. So you and I were talking just before the show about current news and social media. Why don't you get into that with the audience here?
Well, and I can't wait to talk to you and Rick about real estate, because I've got a couple things I want to ask Rick. But I tell you what, after the news the last couple of days, I came real close, and I'm still on the edge. You guys might have to talk me off, but I'm real close to maybe literally dumping all of my social media environment, Facebook, LinkedIn, Twitter, everything I'm involved with, Skype.
Yeah, but what about all those good-looking girlfriends you have?
I don't really want the government listening to my conversations. I don't want them reading my email. I don't want them to know what's going on in my private life. And I'm beyond concerned. And I'm not on the left or the right. I'm an issue-oriented person. I'm not a Republican, and I'm not a Democrat.
Okay, let's get some feedback here from both Mark and Rick. What do you guys feel about that?
Well, it was really surprising news to hear, and particularly with a Democrat in office, because we know how we all got, we Republicans and or those of us who at least are on the conservative side, when Bush has been in office for 8 years, I mean, that's all we heard was the trampling of civil liberties, and now we've got a Democrat president in there and a Democrat-controlled Congress, and it's the same old, same old. In fact, if anything, it's worse.
It's scarier.
Well, the thing I thought was fascinating was that you watched all the talking heads talking about this. It was all of a sudden the Republican talk, the kind of the more conservative side who would normally be bashing Obama and everything else. All of a sudden they found themselves in the position of going, well, no, I think this is kind of what this is the stuff that we need to do to protect our country. And I thought it was quite fascinating, actually, to watch that.
That's why I call them Democrats and Republicans.
Yeah,
it's all the same.
Yeah. But, Coach, what do you, now there's...
Look, here, I've got several issues, and again, I'd love to get your feedback, all of you guys, but issue number one is that privately held companies are they taken over by the government? These are privately held public companies that have not divulged any of these issues to us, their client, their customer. These are privately held companies that are allowing the government to push them around. Guys, I don't get it. This is not the America that I know.
Well, it is a slippery slope because, again, it starts with, well, look, we're just looking at phone call records. We're not listening to phone calls. Okay, well, great. So
what's the difference?
Well, and do you really believe that? But we're monitoring emails, but we're not reading them. It's just like it starts to sound like nonsense after a while. And plus, it's the foot in the door. It's what is it going to look like in 2 years, 3 years, 5 years, 10 years? It's the creeping aspect of civil liberties vanishing before our eyes.
And wherever you heard that term, what's the definition of is, right?
Yeah.
Well, and they're not reading the emails until one of the buzzwords comes up, and then they have to.
Exactly.
1984, but in Southern California, we have cameras on so many cities now have traffic cameras. They just did a thing on the nightly news that in Washington, D.C., $8 million on one intersection. $8 million in one stretch of the road that they earned from people speeding 5 miles over the speed limit. At what point, guys, do the cameras go into our home?
Well, but that, the other side of that, again, not to be the argumentative guy, but we had the bombings in Boston, and it was because of those same exact cameras that we were able to identify quickly who these guys were and get them down. So.
Well, look, I remember after September 11th, they asked randomly how many people would like to see random cameras on every corner, and 95% of the people said yes. And again, it's just like
well, I want to know who they polled on that one. I don't know. I believe that side. But Coach, you mentioned the cameras, and then of course now they've got this thing called the Google Glass, the glasses that are going to be attached to the internet and have a camera, and everybody's going to be walking around photographing everything. I mean, I read science fiction novels growing up as a kid about living in a world where your every move and everything you say was photographed, and the authorities always were on the alert, and that's just a scary thought to live in.
Well, and your show's about investments, or we're going to talk about real estate, but I think this is going to have an effect on almost every industry. And your point about the glasses, Edward, are spot on. So here it is, 2013. What happens in 2016 or 17 when you go into a store and you have, let's say, beyond the Google glasses, but now the employees or certain companies have cameras and they're looking at what shirt you're wearing. I'm an Oregon Duck fan, so I'll walk into a store and the government will know I'm an Oregon Duck fan. And maybe they don't like that. Maybe the president is a Ohio State Buckeye fan, and he's going to have issues with Duck fan. I mean, obviously I'm taking it to the extreme, but did you guys ever think we'd be at this point? And where are we going to be in 10 years? So that's my question.
We're all going to have to be wearing brown shirts.
Well, and they're already talking about clothes becoming computerized. So your buttons are now camera eyes, wearable wear, right? And so it really is going that direction.
Or what about just because of all the gangs and stuff? They say you at some school you can't wear red. You can't wear any color red.
Yeah.
Because it's a gang symbol.
That's true. No, down in L.A., you're right. You're absolutely right. So, we can dwell on and on, but at some point, who's going to take responsibility? Who's in charge, you guys? I thought we, as a democracy, we send representatives to represent us. My question, after the last couple of days, is: are we, as a populace, being represented properly? That is really.
They represent themselves. I mean, the job of a politician, I've said this before, is to get reelected. They're not servants.
Raise money to get reelected.
Well, and actually, I think that's probably the only thing that most people, whether it doesn't matter what side of the aisle that you're on, they probably all agree that we are not being represented.
Oh yeah.
Right. I mean, so that's a kind of an interesting
I saw something
conundrum.
I saw something on the internet, just like Yahoo or something, just before he came on, and it said, most people don't trust their government. And it's like, gee, that's news.
That's not news.
Okay, guys, we're going to cut to our first commercial break here. The trivia theme is old TV. All right, what old TV show featured Ralph, Alice, Ed, and Trixie? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What old TV show featured Ralph, Alice, Ed, and Trixie?
I know the answer.
Okay, don't tell us yet. Don't tell us yet. Hold on. When we come back, we'll let you answer it. 888-912-1190. Make sure to include your email and your name. And remember, when you give us your email, spell it slowly, like E is in Edward, D is in David, W is in Warrior. Okay. And don't touch that dial, because the best of investing is going to be coming right back with some excellent real estate tips. What do you want?
No, let's have the conversation about what's going on in the market.
Okay. Here we go. Ready? Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Rick Warner of Keller Williams Realty. And on the phone, we have America's Business Coach, Coach Ron Tunick. When we cut to the first commercial break, we asked this trivia question. What old TV show featured Ralph, Alice, Ed, and Trixie? Coach, you know that answer.
Yeah, I do. Let me get it. The Honeymooners.
The Honeymooners. Hey, Ralphie boy. Do you remember that?
Yeah, that was
Okay.
To the moon.
To the moon, Alice. Yeah. All right. Coach.
You guys are old.
Yes, we're very old. Yeah, Rick here, he's just barely out of high school, aren't you?
Yeah.
Yeah, close. Okay.
Just
Actually, no,
recently
he's quite
graduated.
seasoned. So, Coach, you were going to start talking about how all the social media
the
and
first
real estate.
segment was we're talking about what's going on with the government, eavesdropping, blah blah blah. But I want to get Rick involved because Rick, doesn't the government, or did the government, or is currently the government having an effect on real estate? I'd love to get your take on it.
Yeah. Well, I think let's take the second question first. Does the government currently have an impact on real estate? Absolutely, right? By buying down the bonds and keeping the interest rates low. That's having an absolute impact. Whether depending on what side of the where you're sitting, it may be good or bad, but it certainly has driven. Here in the last 16 months, the market's just gone crazy because of the other part where they're having some impact, maybe indirectly, but all of these foreclosures and short sales have kind of dried up, and the regular buyers, in quote, Mark, in air quotes, are kind of slow to come back to the market, and so we don't have a lot of inventory. So between those two things, whether directly or indirectly, absolutely the government's having an impact.
Well, I think also the fact that we never really had that second tsunami or third tsunami of foreclosures, that wave of foreclosures people were predicting to happen again in 10 and 11 and even a little bit in 12. There was this, there's
Shadow inventory.
Shadow, right, and because
which is a big lie. It was a myth.
Right. The government has essentially, pressured the banks into not foreclosing. I mean, we all know people who've been living in their homes for 3 years and haven't made a mortgage payment, and they haven't been foreclosed on.
So now that let's say the real estate's gone up, and now they have equity, now what do the banks do?
Well, and that remains to be seen because the banks have held inventory off the market. There's anecdotal information that Rick, you and I both have that we know that to be true in every market.
Well, if they have inventory, then that means they've actually foreclosed.
Yeah, exactly. I don't think that there's any kind of anything large amount of inventory the banks are actually holding on to. They may have held on by virtue of what you said, which is they haven't actually foreclosed.
Yeah.
But to my knowledge, there's no huge inventory that the banks are actually holding on to.
I wonder how one could find that out.
Well, you can go on a foreclosure radar or whatever. You can see what's being held.
But now we've got people wondering whether are we in another real estate bubble right now, given how prices have shockingly increased year over year. I don't know anybody that predicted a year ago where we are today.
No way.
How is it down where you live, Coach? Is it prices increasing?
It's getting a little bit better down in Southern California. I think you've got 3 or 4 things going on. One is you have a little bit better attitude about the marketplace in general. The news is not as negative. I don't see real low employment ever happening in the United States again because of technology. We should do a show on that because right now technology is shipped overseas where it's less expensive, so there's less and less of those high-paying jobs. I think that's one of the things that's going to have an effect on real estate is that if the working public doesn't get moderate raises, if production continues to go at a very moderate level, then you're not going to see big spikes in real estate. The rich are always going to be rich. And let me ask Rick this question. Down in Southern California, we have a real influx of buyers from other countries. Asian buyers seem to be dominating Southern California. Money coming in from other countries seem to be buying our real estate down here. What's it look like in Northern California?
Yeah, no, there's definitely a lot of similarities there. Up here, we have a lot. In fact, I talked to my title person this morning. I closed two deals this morning. She closed 5 total, and 4 of the 5 were all cash. I have no idea where I don't want to talk about what country or whatever. But yeah, there's a lot of cash and there's a lot of high tech people that are coming in that are from different countries and purchasing homes. No doubt about that.
Yeah,
the market has been doing pretty darn well. So it's at all-time highs. My guess, Rick and guys, there has to be some leveling off. There has to be some adjustment. I think real estate. This is no plug for anybody, but I think smart money moves over to real estate now and income property. Rick, don't you think income property would be a smart bet even for a small investor?
I totally agree. To me, it's that double-edged sword in a good way, in that you have some likely appreciation on the asset itself, but you can lock in the cost, with a 30-year mortgage, but you also have the likely inflation of the rent itself, right? So the return on investment is likely going to be going up.
Well,
so
I would hope that they would not. That real estate wouldn't have a continually huge spike.
It can't. It's not sustainable at all. I just got off the phone right before we aired here with somebody with that, and this is the problem that we're having: is that the buyers that have come in the last, say, 6 months, if they haven't been able to get a property, what they were looking at, they can no longer have, right? Anything that they tried to get in the last 6 months, they either have to adjust their price up, or which is being done for them because interest rates have gone up, right? Or they have to adjust what they are going to get down, and so they're facing this.
How much increase are you talking about in the last 6 months for those people? Like $100,000 in price?
Well, it's harder to do price, but I would say percentage-wise, it's easily 10% in 6 months.
That's amazing.
But less and less people, guys, are going to be able to qualify to buy single-family homes. So that's why the rental market should continually start to move up, because you're going to have a supply and demand issue. You're not seeing rental units built, so you're going to see a real demand. There's going to be a shortage of rental units, and that's why I think income property at all areas is going to be a good long-term investment.
I agree, but the thing that you have to remember too is that right now, and since February of 2008, when the thing kind of bottomed out, you have the crossover point now where it's actually as cheaper, and still is, even with things going up, that you could actually buy right now versus rent. And as an investor, you can buy with 25% down and still rent back and have positive cash flow.
Well, two things. One, it's hard to get the loans from the bank still, so you have to kind of take that into consideration.
I don't think that's a bad thing.
I understand, but I'm saying about like what's potentially out there. The other thing is you put 25% down. You may not buy it because there's 40 offers that are all cash.
Well, that's true, but if you can get in, my point is that in 2006 you couldn't put down 25% in cash flow. You knew it was going to be a negative, monthly expense, and now you can still. I mean, it's starting to be where you can't actually, but there's a long way to go before investors start going away. I guess is my point, because they can still get the return, and to your point, Coach, the demand for rent is here now, let alone what you're predicting.
Well, you know what, audience, Rick is going to have to leave us, not this earth, thank goodness, but he's going to have to leave this episode. So before you leave, because you seem like you have a wealth of knowledge, which is one of the reasons we have you, Alan, as a co-host.
Thank you very much.
How do people get a hold of you for more information about buying real estate?
Best way to get a hold of me is just to call me directly, 415-302-6348. You can also send me an email, rick.warner@sbcglobal.net, and my Facebook page is Rick Warner Real Estate Broker.
And if you go to the Best Investing,
I'm on there as well.
He's on there as well. He's all over the place. Okay, we're going to cut to the second commercial break here. Here's the trivia question. Who hosted a game show where a duck would fall from the sky with a $100 bill in his beak? Again, we're talking old TV here.
I know that.
You know that one too. Holy smokes.
Well, you watched way too much TV.
Yeah. And he's not that old either. Okay. Okay, the first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Who hosted a game show where a duck would fall from the sky with a $100 bill in his beak? 888-912-1190. Make sure to include your name email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial because we're going to be right back. You want to go right into that?
Yeah.
Okay. All right. I'll just take it away. All right. Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn from Pacific Private Money. Rick Warner had to leave us, but we're still in the studio. We're actually on the phone with America's business coach, Ron Tunick. When we got to the second commercial break, we asked this trivia question. Who hosted a game show where a duck would fall from the sky with a $100 bill in his beak? Who knows the answer to that?
I don't know that one.
Groucho Marx.
Groucho Marx.
Oh.
That is correct. You bet
2
your
for 2, baby. 2 for 2.
yeah, you bet your life. Actually, the next one's even easier. Believe that or not. I don't know why the questions this time are so easy. Mark, you wanted to talk about real estate prices.
Well, yeah, we got cut a little bit short last segment. We were talking about how real estate prices have gone up surprisingly high in the last 6 months, and what does that bode for the future? And certainly, if you use the old adage that real estate prices follow job rates and employment, and people have to be able to afford the house payments, and that's all true. But my fear is that with all this foreign money coming back into the U.S. market, now that foreign capital, and there's just an awful lot of it out. There's a lot of companies holding, holding U.S. dollars, and they want to put that money to work. They're looking at real estate in the United States and California in particular as being on sale now, and my fear is that a lot of that money is going to continue to roll in and will continue to drive up prices, notwithstanding the fact that homeowners and first-time home buyers are going to get pushed out of the market effectively.
Or what about Apple Computer? Maybe they'll just they'll do what Apple did and just hold on to their $30 billion.
Well, and then we become, we're already a nation of renters once again, as the homeownership rate plummeted after 2008. And yet, on the other hand, if you go to Craigslist right now, the number of rental properties available is like 25% of what it was 3 or 4 years ago. I mean, there's hardly any inventory out there. So it's the housing conundrum has really got me, kind of flustered in terms of where are we going from here. I don't know that I have a good crystal ball, but I hope we don't continue to see 10 to 20% annual increases for the next several years with all this outside money coming in to invest in it.
Coach?
Any thoughts on that?
You're not going to like what I'm going to have to say, but the rich are going to get richer, and then everybody else is really going to struggle. When I do my workshops, people ask me all the time, where should they spend their time? And I say, spend your time with people who have money and ego. Don't waste your time with anybody else. And I really believe that. I believe that our culture, our society is heading towards two classes, those who have and those who don't. And those who have are going to be the robber barons and the king on the hill, and they're the ones that are going to be buying the real estate and renting it out.
Yeah, but are we going to have a revolution?
Not a revolution in the sense that we had in 1775 and 76, but it's going to be more of a economic revolution. It's going to be more of the haves determining the political nature of the country. We're already seeing that. We're already seeing where the president, he's down in Southern California raising money for the Democratic Party or whoever.
He's up here now.
So, the rich are determining who gets into office. And when I'm talking about the rich, it's not only just rich individuals, the movie stars, the entertainment people. I'm talking about large corporations. I'm talking about people who can write a check for anything to influence the outcome of anything. And the average citizen, the average listener that's listening to our show right now, where are they going to wind up? And when I do my workshops, I talk about getting strong independently and independent of the government, becoming strong financially. And that's why a show like yours is so important to listen to every week, because one phrase, one idea picked up from your guest or you guys could be a difference in somebody's life. People have to get off their butts, get back to a work ethic, and think about what I said, because if you have the ability to make money and you're wasting your life by having an extra 3 cups of coffee and socializing, good for you. Because guess what? When you get older, there ain't going to be nothing there for you.
Yep. Better like the taste of
That's
Alpo.
smart.
Yeah, I like that, Mark.
That's smart. True.
Alpo. Okay, you know what? I'm going to move right into an email we received here from a listener who had a question for Mark because he's heard you on the radio and how you fund loans for investors.
Hard money loans
Hard
for
money
real
loans
estate.
for real estate. There you go.
Yep.
Have you ever funded a third mortgage?
Well, that's. I wonder if the person who wrote that question is that someone who's interested in investing in trusting
My
secure
guess they
notes
probably
or,
want to
or
borrow.
a borrower. Yeah, yeah. I don't get a lot of requests for thirds, but the answer is it depends because when we make loans, we're looking at the equity of the property, and so we're talking about investment property largely because we at Pacific Private Money we're serving the real estate investment community, and we have done so since 2008, and we're doing it effectively because the banks have largely abandoned that market. After 2008, financial markets crashed, subprime loans went away. Banks started focusing on making consumer home loans. That's really all they're doing right now. If you're a real estate investor, good luck trying to get a bank loan to buy investment property, and you're certainly not going to find one to finance a fix and flip. They're just not in that business, and so we provide leverage. We provide loans to qualified real estate investors to buy fix and flip, and that usually means improving. They're improving distressed property, or if they're collecting rental properties, we provide money for that too. Now, we did in the last year we did a third, and this was where it was a commercial property, and there was they had an SBA loan on it, but it was really two loans. It was a first and a second.
That's usually how the SBA works.
That's normally how it works. So when that guy came in, and he had a ton of equity in his building, he had a Starbucks as a primary tenant, and they had just renewed another 10-year lease, and so he was looking for like $400,000. And the combined loan to value between the first and the second, which were the SBA loans, and the proposed loan we were making was about 50% loan to appraised value.
Well,
so
how big were the first and second?
Well, again, you're talking about a property worth north of $3 million on the appraisal, and so the combined first and second I think was about just a little over $1 million. So and they were looking for $400,000. So we were at about 1.5 combined, the three loans combined, and so we were at about 50% loan to value. So that made sense. And what was even better for our investor is that the person who invested in that loan got 12% on his money. So because he's taking added risk,
Sure.
even if it's mostly perceived risk, it's still
Well, and
risk.
the first and second combined are probably very low interest rates because it was an
They
SBA.
were.
So it's also smart for him not to refinance the whole thing.
Well, that's very common. We get a lot of requests from people, excuse me, that say, I've got this great first loan on my, rental property or my commercial property. It's maybe 4 or 5%. They don't, they want to pull equity out, but it doesn't make sense for them to say, well, I'll refinance my entire, building with a new hard money loan, which they might pay 9 or 10% for, and the points, right? Exactly. So there's a lot of demand still out there for seconds, and they really fell out of favor after the market crashed because a lot of people who had funded seconds lost their money. They lost capital, some or all of their capital, depending on how much what the loan to value was on that. But so seconds, while they've fallen out of favor, they still make sense from time to time. And so yes, we do.
And question: what did that person who came and got the third mortgage? What did they need the money for?
It was a business purpose.
Okay.
He was basically looking to consolidate. Part of it was to consolidate some debt, but he also had another investment that he was putting the money in.
See, in that case, like you said, I would have loved to have been your investor earning 12% on a third because at 50% loan to value, I'd go to bed at night hoping the guy would default.
Well, and that's just it.
Because you could just assume the first and the second, and who cares as long as it's a decent interest rate. Doesn't matter if there's 10 mortgages in front of you.
Right.
Yeah.
And so we fund our loans with private individual capital. Again, that always bears repeating. And so if you're someone out there that's frustrated by the low rates paid by banks and CDs, the low bond yields, and if you're a little bit scared that maybe the stock market has plateaued again and maybe we're in for a correction and you're looking for alternative ways to boost the yield on your savings, investing in deeds of trust or in a mortgage pool fund, which we have as well at Pacific Private Money, is one very excellent way to earn 8% or more on your money.
And how do people get a hold of you?
Well, we're in the Bay Area. Our number is 415-883-2150. That's 415-883-2150. 2150. That's our office line. We're in downtown Novato in Marin County. Or go to pacificprivatemoney.com.
Or
thebestofInvesting.com.
there you go. Okay, we're going to cut to our third and final commercial break trivia question. Before we do, though, we have another special trivia contest where the winner is going to receive a 2-night stay at. Coach, you ready for this one?
I'm ready.
The Ritz-Carlton Laguna Niguel. You ever heard of that?
Oh, baby.
That's a good one.
What we're talking about.
Okay, so the Ritz-Carlton Laguna Niguel celebrates its 15-year partnership with the Pageant of the Masters and Festival of Arts for the summer of 2013. Call the Ritz-Carlton Laguna Niguel at 800-241-3333 and ask about the Behind the Velvet Rope experience, which includes accommodations, preferred seating, and backstage tour of the Pageant of Masters. That's 800-241-3333 or go to ritzcarlton.com/Laguna Pageant. And the special trivia question for that is, what is the highest priority that women don't tell their mates? Now, here are the rules. You need to email edward@bestofinvesting.com the answer by midnight tonight, and we will choose next week from among the correct answers randomly and let the winner know. And part of the other rules, too, you cannot have been a previous winner on the Best of Investing. So now we're going to cut to our third commercial break, and here is the trivia question where the first 3 callers for this answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. What was the name of the show Alan Funt hosted that would surprise people in various situations? So the first 3 callers with the correct answer to that question are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What was the name of the show Alan Funt hosted that would surprise people in various situations? Make sure to include your name, email address, speaking slowly when you give us your email, spell it out 1 letter at a time. Don't touch that dial because we're going to have some closing comments on the Best of Investing. It's yours.
Yeah.
Okay, ready? Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money, and on the phone we have America's business coach, Ron Tunick. When we cut to the third commercial break, we asked this trivia question. What was the name of the show Alan Funt hosted that would surprise people in various situations?
Candid Camera.
Candid Camera, that is correct.
Man, it's the first time, and I don't get anything. I don't win anything, but darn it, I know your beautiful resort. Is that what people are getting?
That's what they get, is a 3-day, 2-night stay at the beautiful Lighthouse Resort, which it's not mine. It's just, they give it to me to give away on the show. And it is nice, especially in the summertime because of the nice hot weather out there.
Absolutely.
Okay,
Delta's a great place to have fun.
Okay, so here we're going to get into just a couple of quick little articles here. First of all, not an article. This is something I got in the mail, and this is from Hernandez versus Restoration Hardware, and this is a notice of pendency of class action. So, you get these things in the mail that say you're automatically part of a class action suit. Good luck. Good,
Right. Don't do anything, you'll get your check in the mail.
Yeah, basically. You have to elect to go out of it, right? So get this. The lawsuit claims that Restoration Hardware violated Civil Code section blah, blah, blah by requesting and recording zip codes from customers who paid for merchandise with a credit card. Ooh, that's so evil.
I've had that happen to me quite a few times in various places I've bought goods at.
Yeah, but first of all, either you can just say, no, I don't want to give it to you, or who cares? You're not giving them your social security number. All you're doing is giving them a zip code. Where's the big danger in that?
Well, those are law firms that are basically finding things to file class actions about. I've been reading more in the paper lately about the whole patent troll issue, about how these companies and law firms that just make literally millions and millions of dollars filing patent infringement lawsuits on behalf of companies that don't exist except for the fact that they own patents they bought from various sources.
Else.
Yeah,
but something like that. It's one thing if you catch a big company, let's say a telephone company that's been charging fees, the hidden fees that they didn't tell you,
right?
Because that's real damage. Now, all this is just asking for stupid zip codes. But so it also goes on to say here, they seek money or other benefits for the class members. There is no money available now, and no guarantee that there will be. They have to prove their claims at trial. I mean,
That's
that
just
kind of
nuts.
stuff.
So if you enjoy
drives me
buying goods at Restoration Hardware and you enjoy their price as well, this law firm is going to make it so that they're going to probably have to increase their prices to cover their legal fees for
That's a good
defending
point.
a crappy lawsuit.
Yeah, and then how much do the attorneys get? Like 80%
Almost all
of it? Yeah. Okay, then there's a little thing here. Hey, Coach, did you hear that the IRS did some stuff that they shouldn't have been doing recently?
Don't get me started. We're having a nice time
I know.
talking about it. Mark's got a great investment strategy with his private investment. I think it's probably one of the smart things that anybody can do today to diversify your funding. But let me ask both of you: investing in other things like buying old cars and look, I'm getting hooked on this cable TV show, Counting Cars. These guys buy these cars, these older cars, for X amount of dollars, fix them up, and sell them for a fortune. That seems like an interesting play in today's investment.
Well, it's like fixing and flipping
there has
real
to be
estate.
a lot of alternative investment, you guys,
Sure.
that we need to talk about.
Okay, well, here, the only reason I wanted to mention this IRS thing was talking about how they had all these 223 gatherings costing the taxpayers $49 million. Now,
you're talking about their so-called conferences.
Conferences, yeah. So I got a question: are the attendees having to pay taxes on the value that they received? Because if they receive just a regular conference, that's one thing. But if they're getting these lavish rooms and all that, I think the IRS needs to tax themselves.
Well, you are brave to be even mentioning the IRS on a public radio show. I just want to make it flatly known that I love the IRS.
Yeah.
I love the IRS. In my eyes, they can do no wrong.
Yeah, there you go.
Did you know they're listening to the show?
That's right.
They're monitoring the show. So,
we all, Mark loves them, Edward loves them, and Coach loves them. That's right.
Keyword searching,
Okay.
Selective listening.
And Mark, you've had an interesting article there, which we can cover for a couple of minutes.
Yeah, we were talking about, we've been talking about the real estate market, and the real estate market is thriving, quite frankly, but not every sector of the economy is, and that's probably what's most newsworthy nowadays, is that, the so-called recovery is very uneven throughout the economy. And so I just pulled in this little article here. It says, overdue student loans hits all-time high. And so it's
there's a reason for that.
Well, right. Well, first of all, there's
Can't get a job.
a lot of students.
There's two reasons for that. If you want to hear them, let me know, and I'll waive my consulting fee.
Well, absolutely. Well, just the two things I want to mention that they say here is that basically the 11% of student loans are currently seriously delinquent, and that student loans is the largest category of consumer debt besides a mortgage. And
We got to think that more. I mean, you got to think that college is pretty expensive. We're not talking about buying, a couple of
Okay, I'll
dresses
give you
at
three
Nordstrom.
reasons, and then I'll waive my consulting fee.
okay.
All right. So is the amount, Edward, in the billions?
Actually, Mark's article says what?
It 1 trillion.
Oh.
Can you believe that? 1 trillion.
As long as it's under a quadrillion, I don't care.
So college, and you guys know this, has less and less to do with getting a real world job, has less and less to do with making money. Yes, if you're going to be a doctor, you got to graduate from a medical school. Hopefully it's one in the United States. But, the bottom line is that the cost of education, paying professors 6 figures for working 3 hours a week. Come on, guys. Don't we need to get a handle on this thing? Don't we need to figure out that the production quality, the return on investment?
Yes, but they've earned it.
Students isn't there anymore.
They want tenure because they've earned it.
Well,
John Houseman.
well, Coach, it is interesting that this article does say.
Am I wrong or right on that, guys? Come on.
No, I think you're right, but here's a statistic that's interesting. The unemployment rate for young adults who are college graduates, the employment rate for for college graduates is 87% compared to 64% if you only have a high school diploma. So there's still quite a discrepancy there in higher ability.
Oh my God! I know we're running out of time, but going to some of these, big fancy restaurants, and the waiters and waitresses are people with MBAs and master's degrees, and they can't crack the job. We need to do a show on that. That'd be interesting.
Well, we actually, I think coming up here, we're going to be having someone who says that college is not
a waste of money.
Of money. Okay, guys, we're going to have to cut out. Thank you very much,
Oh
Coach.
my God, the hour's gone so
It
fast.
has. Thank you very much, Coach Ron Tunick from America's Business Coach, for joining us. Thoughts for the day: a Saudi Arabian woman can get a divorce if her husband doesn't give her coffee. That's kind of a switch, isn't it? And according to a British law passed in 1845, attempting to commit suicide was a capital offense.
Oops, we lost it. There we go.
Okay, let me try that again. According to a British law passed in 1845, attempting to commit suicide was a suicide was a capital offense. Offenders could be hanged for trying. Yeah, that'll teach them. Okay, tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. His coach got
Disconnected.
Yeah.
Oops.
Yeah.